Hi, everybody. Jeff Yastine here, and welcome back to another edition of Wealth Press TV. And as always, make sure to like and subscribe to us, follow us on social media. And now, finally, the person you've been waiting for, Lance Ippolito. Lance, welcome back to Wealth Press TV, man. I'm really glad to be chatting with you again.
Thank you. It's good to be here.
Yeah, so, the key question, of course, it's all anybody's been talking about for almost a week now, is the whole thing with Reddit, Wall Street Bets, Gamestop, AMC. Now, they're talking about trying to corner the silver market and this and that. Anyway, so, just give me your sort of view of the forest here as far as, what, in your view, what does all this mean?
I'm even though I'm young, I'm not really down with the whole Reddit and online. Like I knew Wall Street Bets existed, and I knew it was, a forum and people were going on it. And I knew there was Facebook groups. One of my research analysts was involved, but I thought for the longest time it was just a bunch of, college kids and people with a few $100s in a trading account, picking your low price stocks, hoping to get that home run, so to speak. I really never gave it much attention, to be honest. And now it's taken over. How long will it last? I don't know. But it is changing the market. And I see it not only, the past couple weeks in the stock market, but I'm starting to see it in the options market, which is primarily used by professional investors and traders. It's taken over. And I'm still trying to process this new wave of trading.
I suppose the key thing, at least the way my brain works on this, is trying to figure out, well, number one, I know, speaking just for myself, there's, when I see these short sellers getting run over like Melvin Capital and some of those, there's a part of me that cheers that, because we've all bought stocks that we knew were more valuable, and yet somehow they could never get any momentum going, and you knew it was because there was some short seller or group of them out there that were really just leaning heavily on the stock, and it just makes it so much harder to blow through it. Obviously, the Wall Street Bets folks have succeeded in that. But is it a good thing or a bad thing? Because like you say, if the market's changing here, in some ways, we have to be careful, I would think, what we wish for, because if it's rewriting the rules, then suddenly, a lot of things that, especially if you're trading on a day-to-day, week-to-week basis, which isn't so much what I do, but I know it's what you do, and especially when it comes to options, doesn't it then kind of cause you to pull back a bit and say, well, maybe I need to, hang back a little until I understand more and see how long-lasting this is or not?
Oh, for sure. I didn't know how powerful this group was. And I follow order flow. Primarily, that's all I've been trading for the past 6 or 7 years, is strictly order flow. And Melvin Capital was one of these firms that they were so spot on in the options market. If someone came in and bought 5,000 EA calls, it was Melvin Capital. I don't want to say with 100% accuracy, but with a high probability, I can pinpoint, who was behind these stocks. If I saw a big American Eagle call buyer, Melvin Capital, I kind of knew who, were going in the options market and making these, hundreds of thousands, millions of dollars in premiums. It was them. And then, you could look at 13F filings and see what some of their positions are. So, I used to love following them, pretty much just piggybacking. Like, I'm not going to call up Melvin Capital and be like, hey, guys, nice trade on those American Eagle calls, right? It's not going to exist.
Right.
But what I could do is, if they're trading a 10,000 lot, I can go buy a 10 lot, a 20 lot, a 40 lot, and piggyback on some of those gains. Now, I haven't been seeing that aggressive call buying anymore, and maybe it's because some of these, blowouts in the funds. But also, what's really caught my attention is, I've been seeing call buying in silver stocks last week, and normally I wouldn't, put retail as someone who can go and buy, let's say, $200,000 of First Majestic silver call premium. Usually back in the day, I would think, oh, that's a prop trader, or that's a big trader, with a multi-million-dollar account putting that premium. Now, it could be a message board of 1,000 people on Reddit all buying, let's say, 10 lots out there, and they all buy them at the same time, and it comes across the tape as a 1,000 lot or a 3,000 lot or something like that, and they're not, in the past they weren't considered smart money, or they didn't have some kind of information or a tip or some awesome analysis, or knew Goldman Sachs was going to upgrade the stock tomorrow. But they're starting to stick out in the options market, and that's making the analysis of institutional order flow and order flow into maybe that's just a regular Joe sitting at home, and he's part of a message board playing the options, which is insane. I never thought ever, there would be this much power that the little guy would have, and we're seeing it, and especially over these past couple weeks.
And it's a good point you make about smart money. And again, I use that term with a lot of latitude here, because we all know institutions, hedge funds make plenty of dumb moves, as much as they would ever put it on just regular folks, like us, or the Wall Street bets crowd. But if this is muddling the picture of what the smart money is, it kind of makes me wonder, like, is there perhaps more significance here to the overall market? And let me see if I can make my point quickly here. We're at an extended point valuation-wise for the major indexes. We're on the far end of a rally that's gone on for a long, long time, years, if we want to talk about it, between the last true, terrible bear market. Is something like this perhaps a marker that we need to be, let's say, concerned about, as that whole thing of what's the smart money and what's the dumb money gets sort of muddled here? In the same way, like I can remember in 1999 when Time Warner bought America Online, and they overpaid by an incredible margin. And as it turns out, that was like the top of the market. Another marker was Yahoo buying Broadcast.com for like $5 billion in shares, which is what made Mark Cuban, the Shark Tank guy, a billionaire. And the only reason why he's still a billionaire now is because he went and hedged his Yahoo holdings, so that when he knew it was overpriced, and he hedged his Yahoo shares to make sure that as they tanked, he would still be a billionaire at the end of the day. So I guess I'm just wondering if an event like this may have implications even bigger than we're thinking here.
Yeah, we could have this argument, I think, with the whole SPAC boom. Really the IPO boom, and then the SPAC boom over the past few months, and now this craziness, we'll say, in the markets. We are extended. There's no doubt about it. We could make the case over the past couple months of healthy rotation out of some tech into some banks. You had energy bounce, and that's those are signs of a healthy market. But right now, at a glance, do I think top or bubble? Sure. It's like the first thing that comes to my head when I see people who have, never hit me up before saying, hey, what do you think about this stock? Or is now a good time to buy Dogecoin, I think it is, and stuff. Those are things where I'm just like, oh my goodness, like this market's going to crash. But the other side of that is, what if this lasts? The hardest part to do is time the market. Yeah. What if this goes on for another 3 months? What if we get, another stimulus money come in, and people are still working at home, and the new administration is doing everything they can to keep the market going. I mean, we could keep going up, and we can still have this market continue to rally. But at the same time, it's like, wow, I just, I go and I like following, FinTwit, and I like watching the financial media. Sorry, Reddit people, but I don't like the outline of the layout of the app or the website, so I'm not a part of it. But I see the people on TV, these money managers, and they're saying, yeah, I'm in cash. No, I don't want to buy. Yeah, short GameStop. I bought puts on this. And I'm thinking to myself, man, if these people are scared of the market and they're sitting in cash, usually when that happens, the market will keep going up until they start seeing their Amazon, their Google rally hitting new highs, and they say, screw it. I got to put my money back in the market, and they just extend that rally, buying the top. So that could still be a case where you have smart money in cash on the sidelines, and eventually they throw in the towel and they say, all right, I'm going to buy, Microsoft up here at a 52-week high. I'm going to buy Amazon after earnings when it's up, $300. They said the same thing with Netflix ahead of earnings. I'm not buying it. I'm not touching it. And what did Netflix do? Had a 2x implied, or had a 2 times market maker's implied move on earnings, and absolutely crushed it. And here it is. Everyone's chasing Netflix at a new high.
Sure. Well, and kind of going in that mode of thought here. What do you think? Like when you read, all right, so the GameStop was the thing of the moment, and I guess we'll find out soon enough whether it was really a lightning strike that won't happen to that degree again, or if this is, as some have said, maybe a new kind of paradigm, which again would just be mind blowing if it was. But what do you think about then? Now I see some people saying, "Oh, we're moving into AMC," and you mentioned, we both mentioned here silver, and who knows what it'll be, later this week and into next week, as these groups target various things. In other words, is it something that you would pay attention to? Should, in your opinion, people at home be paying attention to it, especially if they're not used to trading? And to me, I just think it's a little, it's a little dangerous, like trying to fix your own, electrical socket or something. You should know what you're doing, so you don't do too much harm to yourself. But what's your opinion?
You are getting, if you have been in these stocks, you are getting a gift from the trading gods. When I look at the top holdings on Robinhood, I actually used to look at that. They used to actually have that data, and it was stocks like INO, Sundial Growers, Siri, Nokia, Eric, SRNE, GoPro, the Aurora Cannabis, the GoPro, these American Airlines, AMC, right? GameStop. These stocks have rallied, and not just your GameStop and AMC. You look at your silver miners today, your INOs, a lot of these stocks that got hit hard, or that have been doing nothing for months, if not years. You got a gift that they are up. Some, like today, some of these stocks are up 20, 30%. And over the past couple weeks, you got an exit. Take it. It is a gift from the trading gods. If you're sitting at home like I am, and I'm looking at GoPro up 19.5% today, and thinking to myself, wow, you know what? I'm going to get in this stock now. I think you're a nut. I can't do it. I can't pull the trigger. And all I do is hit the buy button, because I'm basically have to, because all we see in the options market is call buying, no put buying. I just can't. I literally can't pull the trigger on these stocks that were dead a few weeks ago, and now that are up. They can go higher without me, and I'm just going to miss out. But if they come down, if you look at like a name like Kroger, it had a huge move to the upside for days, and then just fell. The rug got pulled under it. I am willing to watch the movie, eat my popcorn, and yeah, my wallet's not going to be fatter, but I'll enjoy it while it lasts.
Yeah, I'm right there with you. I mean, I know for myself, and I know, again, I've raised this point about, well, is this getting into dangerous territory? And we don't know. People like you and I have been speculating on the dangers of the market, in some cases for many quarters and many years, really. So you can't get too ahead of things. But at the same time, it's when it starts feeling this easy, and man,
Yeah.
it seems like everything you buy, everything you talk about, it's up 10 and 20%. As you said, in a day, it doubles and triples and quadruples. And it's like, man, I can imagine if you never have been exposed to the market before, you're thinking, this is great. I mean, this is like the best thing ever.
It is, ever.
Right.
I have people messaging me saying, hey, I just bought 10 shares at AMC. And I'm thinking, what is AMC at? Like $10? So you put $100 in? What are you hoping to do? Well, double my money. And I'm thinking to myself, man, if people think doubling their money, is that easy, buying a stock? Wow, incredible. But I just can't. And back in December, I said to myself, I've had an incredible year. I'm very happy. I'm going to sell all my stocks, close out all my options, and just go into mid-December. I literally said I was going to semi-retire, take a few weeks off, maybe see how January was, because I thought at that time the market was extended. And I'm not just talking about, the Qs or the S&P, just everything. And what happened? About a week later, here I am buying call options. And it hasn't stopped because this market continues to go. And, if you're not trading the GameStops out there, there's still opportunity. And it's still, we had a down day Friday. Whoop-de-doo. Qs are up over 2.5% today. It's just incredible.
Yeah, it is. And in fact, I'm going to circle back to the Wall Street Bets Reddit thing here in a moment, but I'm just curious, stocks wise, if we separate out the Wall Street Bet stuff, what areas would you be looking at? Like I noted just today, on the day we're taping this, and in the last handful of days, including last week, some of these, I call them the junior vaccine stocks, have started to come alive. Dynavax, Vaxart, and I don't think Inovio, but there's the other one, Novavax, is another one. Like, are those sorts of stocks? Are there basically, what other areas? I don't know if you want to talk about specific stocks or sectors that you like, at least as things stand right now, knowing this is a fast-changing market.
Yeah, this is going to sound like the craziest thing, but we had a lot of those funds get their ass squeezed together on the move higher by GameStop and stuff. So a lot of these players out there, they were, having to sell their big tech holdings, right? What led the market up from, you could say, March, but really what led the market since, let's say, back in the financial crisis, let's just say that over the past 10 years or so, it's been Fang, right? Your Facebook, Amazon, Google, Apple. And what has been lagging over the past couple weeks with the whole boom of GameStop and Wall Street Bets? It's really those Fang stocks. You look at Apple with good earnings, it sold off. Microsoft, great earnings, popped and sold off to actually red on the day. Facebook really lagging in names, like Amazon with earnings upcoming this week. I think you're going to have the folks that got either crushed on the move in short stocks or funds that have been on the sidelines in cash. I think you're going to have a rotation if this market holds up, and especially if Amazon reports good numbers. I actually think you can actually see an extended rally in the Qs thanks to Fang stocks, and they play catch up. And if Fang stocks pop, let's say 5 to 10%, that's a huge move, not only for them but for the overall market. If you look at the impact of how much Fang makes up, the Qs or even
Yes.
the spiders now. I mean, it's incredible. So yeah, you can have a nice sideshow, and I know it's in the spotlight today and has been on these highly shorted stocks, but imagine if Amazon reports good numbers. What is that going to do to internet software stocks? It's going to
Sure.
pop them. What's it going to do to online retailers? It's going to pop them. What's it going to do to Fang stocks? It's going to pop them. And then you have Google with upcoming earnings. It paints a good picture. And yes, we can't forecast the markets. I don't have a crystal ball, but I'm just saying if those pieces to the puzzle start connecting, you could have a real bullish momentum in that XLK. And I mean, I don't even want to talk about chips. I mean, look at these chips today. Taiwan Semiconductor up 8%. I mean, TSM, Cree, you name it. There's a lot of good still, like, despite the Wall Street bets crowd out there. And I think also, too, if the market stays strong and Fang stays strong, heck, you'll probably have these Wall Street bet stocks hold up. And then you'll start getting, well, Google's going to buy GoPro and chatter like that. Hey, go for it.
Right. Well, let me flip it around. Because you painted an ideal scenario here and I would agree 100% with everything you're saying here. What would need to happen to start getting you more worried that perhaps, that we are going to get more of a pullback? Aside from the market itself pulling back, it's kind of like duh. But, are there warning things that you would be looking at, excessive amounts of call buying and those sorts of things? I don't know. Any clues in the wind there for that sort of thing, in your opinion?
I mean, last week, the market Eternals looked really poor. Like, if you looked at the extreme readings in the trend index, the Richard Arms index, I mean, you were seeing like 0.29. You were having like 1.8 readings. I mean, you were having extreme readings. You had some nasty institutional selling in the NYSE tick. I saw negative 1,200 ticks, negative 1,000 ticks some days, which are just, really, really aggressive selling. If you look at the Aussie yen, you've been having some extreme moves in the carry trade. The market Eternals have looked bad last week. Today they're improving. You have some nice, healthy, positive 600 ticks. No positive 800 ticks. Financials, you could kind of make the case they are looking a little weak again, especially after their rally into earnings. But, bonds haven't really budged. And, if you look at the move in bonds over the past couple of days, they're not doing much. I know the silver squeeze is a popular topic and everything, but you really haven't had any rotation into safety or into gold. Which normally, if you get a market sell-off, you'd have money going to safe asset classes like gold.
Gold and bonds.
Yeah, and, I just, Amazon misses, Fang gets torn down again. You have selling off Amazon, Google, bad numbers, and they, liquidate. But if you look at Apple earnings, Apple barely budged on earnings. It was well within the implied move. Facebook, yeah, it sold off, but it's barely sold off compared to the market maker's implied move, and it had a nice bounce back, even though they announced the buyback. It would take, I think, some major policy in the government. Maybe Yellen starts yelling and she says something. I don't know. It's hard. It's hard to say, hey, this is the major factor for a sell-off when it's so much free money coming out.
In the case of Wall Street bets, I guess I'm just wondering, as far as the SEC, there's been a lot of noise that we're going to look into this, Senate and House committees, et cetera, investigating all this stuff. Do you think that that's something that will actually happen? And again, none of us are political experts here, but do you think that's something that if you were in the Wall Street Bets crowd, or let's say one of the folks actually, directing the conversational traffic within there, is that something you'd have to worry about maybe getting shut down by, by the one of the agencies?
Worst case scenario, let's say, they get shut down, they'll just find a new platform. People are smart. I think it's a younger crowd. There's so many platforms out there and so many ways around that if you look at usually how government does everything, they're either late to the party and very slow. I don't see much of a fear or worry from them, and that's kind of being nice in regards to what Wall Street has done for so long, and has really the government ever really stepped in besides a couple fines and slap on the wrist?
Rarely.
Right, and just I can't see anything crazy. I mean, it would be I think like winning the lotto or something, that kind of chance to see real change, we'll say.
All right, that makes sense. Lance, what other areas would you be looking at? Because we talked some, and you're talking about Fangs is one area, and I'm just curious if there's other sectors that have started to draw your attention here, or maybe another question would be, since the Biden administration has been in place now for a month or so, well, not even that, really, a couple of weeks. Are there aspects in terms of the administration's plans that would be anything you would be looking at? There's perennially, somebody's always talking about infrastructure bills and this kind of stuff that either happens or doesn't happen. Most often it doesn't happen, and I'm just curious if there's anything along those lines that's drawing your attention.
I think the normal answer would be like, yeah, solar and clean energy, but they've already moved, right? You have to understand, as a retail investor or trader, you're usually, 2 steps behind the move. So all the easy money, I would say, has been pretty much played out, and you're already starting to see some small pullbacks in solar companies and such. I'm actually looking, and it's I guess we can tie it to the Biden administration because of, I guess, his connections, let me say, with China. But a lot of these Chinese stocks have lagged. You look at Alibaba with all the news surrounding Jack Ma, and Baba reports earnings this week. The stock's, is it off 60 or so from the highs?
Right.
Especially with you have Amazon upcoming earnings this week too. I actually like these China stocks. You're like VIPS, your JD.com, your Baba, PDD. These stocks to me are starting to look a little bit more attractive. They're catching my eye. And a lot of the chip makers, your Taiwan Semiconductor, TSM, that stock has been on a tear for so long, and they continue to buy calls. So I think, China stocks, chips, and I can't believe I'm saying this, but, chips are, some of these chips are pulling back 10, 15% off their highs. If you look at names like AMD, Micron, they can really get the party started. If you're looking for another round up, I spoke about tech, what's going to follow tech and those semiconductors. And there's been, news out recently that there's such a chip shortage out there. So I like them too. Like I can't stop looking at your Micron, your AMD, your Lam Research. I think they continue to rally or make a comeback, I should say.
This is such a chaotic trading environment. Where would you suggest people to look for the things that you do that might provide some solutions? Let's put it that way.
A service called Sweet Spot Stocks. We find stocks at the sweet spot, and I give people buy zones and sell zones, and usually they're not like your super popular stocks that everyone knows about. I try to go after companies that are, still very liquid, and have options and trade a lot of stock, but they're not popular on the financial media yet. Some of the names in that service, like I just talked about some China stocks, like Tencent Music Group. We did this stock a buy level sub 15, and within about 50 days or so, the stock's at $28.
Nice.
We've had some great picks on there from Callaway Golf. This stock around $15 to now $28. FireEye, Cloudera, new 52-week high today, up 5.5%. DraftKings, which we all know how that one turned out, just a awesome move there. But I guess I'm kind of giving away all the previous picks because they're all at highs.
Lance, man, really appreciate you coming on to Wealth Pros TV and giving us your views and some ideas here. Thanks.
Thank you, Jeff. Always good talking to you.
And for all of you, again, remember to join us next week, next Wednesday, and our broadcast time these days is 3:15 p.m. Eastern time to catch us. And until then, we'll see you next week.